Good morning, traders. Todd Gordon here. This is going to be a video update for Thursday, February 11th, and futures are getting smoked here ahead. I just want to get this video out to you quickly, just keep you updated. We've been following the NASDAQ pretty well. On the downside, we put 2 new positions on in Apple and Amazon, and I want to show you those guys and show you the option positions we're in. So let's dive in. Okay, so looking at Apple here long term, this is the daily. We're looking at just a very simple measured move from the highs back up to the reactionary high there in November 2015, and then a full measured move or symmetry is going to be $81. On top of that, let's do an external retracement of the little correction, and what you'll see is the 1272 is right on top of that. So downside target's going to be about 83 in Apple. Okay, so let's also, let me just delete that, keep it simple. I also want to throw the Elliott wave analysis on here from Advanced Scat, and I'll show you something interesting here. So right now, and this was the reason we went short, and I'll show you that position. Looks like we have a first wave, second wave, 3, and then looks like we have a sideways consolidation going on in wave 4 here, which ultimately should give way to the break down towards that $81 to $83 level I just showed you, right? So the trade we put on was with the customers, with our research customers. We did a 93.91 put debit spread. The reason we did a put debit spread is implied volatility in Apple is actually quite cheap, and it's underperforming the NASDAQ, so it's better to be buying an option spread rather than selling one because you're not going to get very much. It's better to buy those cheaper options. So that's number one. Number two is this Amazon trade. We did sell a call credit spread in Amazon. Reason we did that is implied volatility is quite high in Amazon. So let me show you where we're going there. Over to the daily. Okay. So Amazon is quite interesting. As I said, implied volatility is very high, but Amazon has already progressed down to the measured move, the symmetry, right? So you take this drop, whatever that is going to be equal pretty much to the lows here, 47. Now, if the Elliott wave analysis is right here, we should get through 100% because typically the third wave is longer than wave 1. So you're looking for the 1272 as well as the 1.618 projections off of that first and second wave. So Amazon should be able to get down to 446 and probably 395. So this support shelf is interesting because it's the old lows from October 2015. It's a 100% measured move. So if we break, that's going to be pretty interesting. You can see we are really trying to struggle here. Amazon pre-market is trading. It's come back a bit here pre-market. Amazon trading 490 off of the 480 low. So we're getting close to that breakdown, okay? Let's just take a look at the intraday and see if we can pick up the dominant pattern. Down to 180, yep, same thing as Apple. So it looks like, actually, let me go to a 60-minute. Yep, okay. So it looks like we should have a fourth wave resistance coming in here. This is what we're playing ultimately for the wave 5 drop down into those lower levels they just spoke about, guys. So it's interesting here. I do think the technology continues to lead it. We do have a long gold position on. I've talked about that in the free video. So it's interesting, but you know what? I'm also looking at longer term support levels that we talked about with our members in the research. So gotta trade in here, man. It's pretty wild. So hopefully this video helps. Just kind of give you an idea what we're trading Amazon and Apple. Go ahead and hit the like button in YouTube if you're watching there. Also be sure to check us out at tradinganalysis.com. You can get a 30-day trial. All right, guys. Good luck trading today, and we'll see you soon.